Good evening, everyone, and good morning to some of you out there in Europe as well. My name is Sam. Welcome to the Hidden Edge podcast. This is our new series that we have introduced very recently called The Third Degree, where we bring in on a special guest, do a little bit of interview, talk about their background, how they got into investing, and in addition, what their investing style is. Now, keep in mind that it is pretty late for our special guest we're bringing on here. Actually, it's pretty early for him, but it's pretty late for us in the States. It's pretty good to. There's a little bit of echo. Hold up, one sec. Never mind. Okay, thanks, ETF FaceTime. It's great to do these late night podcasts with you guys. Some people are in Europe, some people are in Asia, and some people are night owls like myself in the US. So I wanted to introduce Samuel Meuciar. He is an investor, probably a little bit early in his investing career. I really admire his work, the due diligence that he does. It's actually very unique because when I started out in investing, I was a little degenerate myself. I didn't really do as much research and due diligence as he does, especially so early and so young. So I have him backstage. I'm going to go ahead and bring him on. Sam,
Hello.
nice to meet you in person. How are you, man?
How's everyone doing? I'm fine. It's in
Yes.
the early in the morning, but yeah, I think I'll do well. I got
Yeah,
the
yeah,
coffee.
man. That's good. That's good. Oh, so you drink that special European coffee. That's the one thing about coffee in the US versus coffee that I've had in Europe is that it just blows US coffee out of the way. Like I don't I've had a lot of different coffee out here, different places all around the country, and it's just for the most part, no matter where I go in Europe, the coffee is just out of this world. Did you brew that yourself or did you go out and buy some?
Nah, it's made by the machine, so
Huh?
I didn't really have time to brew it myself because I woke up like 20 minutes ago. So
Oh wow, okay, okay. What time is it over there?
it's 6:18 a.m.
Okay, not bad, not bad. Pretty early. Do they have the term out there? Early bird gets the worm.
Yeah, I think so.
Oh wow, I can't believe that's a term used out there. That's pretty crazy. I'm sure like there's lots of terms we use over here in the States that people in Europe are just like, what in the world are these people thinking? Sounds good, man. Sounds good. So tell me about yourself. I know you're a pretty young dude. I don't want to reveal the age unless feel free to do so yourself if you'd like to. But tell me a little about yourself. Like what got you into investing? What what really drives your passion in it? And then also a little bit in your investing style.
All right, so I can reveal my age. I'm turning 22 tomorrow, actually. And
Wait, how
what
old?
got me into 22?
22. Wow, man. Okay,
Yeah.
go ahead.
And basically, what got me into investing was actually my dad because he was teaching me about, financial literacy and stuff like that, investing, the concept of it in general terms, because he was basically taking care of my money and my family's money. And it got me interested in the whole idea of maybe securing yourself for the retirement eventually early, because the earlier you start, you obviously earlier you can retire, right? And yeah, so I started right after I turned 18. I was actually invested in ETFs and stuff like that even before that, thanks to my dad. But then I actually took things into my hands and started allocating capital into individual stocks. But I wasn't really good at it at the start, because I was like looking at sites that were like recommending stocks. Everybody basically started there, and it
Yeah.
wasn't good. It was a train wreck. And then I eventually started learning about like the basic stuff like revenue, net income, free cash flow, stuff like that. Basically, right now I'm trying to invest into companies that are, usually I'm trying to avoid cyclical companies, but rather like secular growth companies that are printing nice cash flows. Serious businesses that are not really going away anytime soon and maybe are even emerging. I try to have like a mix of steady growers and fast growers into the portfolio that can basically yield alpha results versus market, which is going well so far. So yeah, Hims and Duolingo are like one of those companies that I've caught pretty early, simply because I was looking at these sectors. For example, Duolingo, if I can segue kind of into that,
Yeah, go for it.
Duolingo was basically just an idea because I was obviously still in the high school, and I was looking at like how we can improve the whole learning process with education. I felt like it's broken because it's not engaging, it's not data driven anyways. And Duolingo, kind of what I've seen in this was like not what many people see, because most people only see it as a language learning app, right? But what I've seen with what they have made is really like a very engaging way of how you can learn. You know, it's a basically a working concept that you can then replicate across many subjects, right? So it doesn't really have to be only language learning. You can make it like physics, eventually maybe even some concepts of programming, geography and stuff like that. That is eventually like pretty engaging, right? It's data driven because it's customized basically for your learning process, and you can monetize it well because it doesn't really cost much, but you like pay a subscription, right? They don't really make all that much money from advertising because it's only basically like a tool for them to push you into the subscription. So
Yeah.
that's how I came around into Duolingo. I started buying it like $90 or so. Now we are at like almost 300.
Yeah, it's pretty up there. Question. So what you said you're in ETFs at first, and at what age did you actually start buying or did you start allocating capital into non-ETF stocks or single name securities?
Right after I turned 18.
So it was like 2020.
Yeah, and it was pretty rough. I started in
Oh, okay.
November because I've got to, you know, since I'm turning 22 tomorrow, then you can tell then I'm late October. I was turning 18, and then I just made a brokerage account. I don't, anymore work with that brokerage, but that's not what is important. In reality, I was like trying to, with small money, trying to allocate capital, but yeah, I was getting burned. And so in the beginning, I was feeling like pretty good because markets were rallying up, right? It
Yeah,
was
man. I was like,
around
no, it was
it was
COVID.
around the election season.
Yeah,
Yeah, it was
yeah.
around the election season. So the election ended, Joe Biden won, and everything went up like crazy, right? Right after that, especially renewables and stuff like that. That was very strong theme back then, from what I remember. And yeah, so I was buying these renewable companies because everybody was in it, and I'm so glad
Tesla
I
and all
was
of them,
getting.
right?
Yeah, I've been very early there, and it didn't really move much. But I was buying even worse stuff like Sunrun and stuff like that, if you know them.
Well, I remember
And
that
oh
whole
man,
ETF. That thing was ripping up hard.
yeah, it peaked at like $100. Now it's like at 13, from what I've seen the past few days. Like so many stuff that I was buying back then was just plain stupid. No free cash flows, bad margins, no pricing power. And like a few days ago, when I was kind of getting into teaching some of my friends basics of investing, I show them my early mistakes in investing just to humble them, because right now we are in the bull market, right? So everybody is very smart, obviously, and everybody's making huge percentages every week, right? But that's like not where you actually learn stuff about investing. I'm so glad actually I was part of the bust process, basically that started I think in February 21 for most growth stocks. I mean, I know indices peaked like at November 21, but really look, many of the growth themes peaked at 21 February.
Yeah, yeah, I remember that.
And
Yeah,
and I was getting
that's like
punished.
when, yeah,
I was getting punished constantly, and that's where you actually learn that what you're doing is wrong, right? That is not the high beta chasers that are making money for you. That's where you learn that you should actually focus on the free cash flows, on the profitability, on the sustainable growth that isn't crushed right after they like raise rates and stuff like that. So I
Yeah,
was
no,
getting a ton
totally
of lessons.
understandable, dude. Were you in I'm guessing you bought Tesla, right?
Yeah, I was buying.
And then what was the price of Tesla? Because I think that was what I guess it's kind of hard to look at it now because they did have that split.
Yeah.
Probably they peaked. But what at today's price, what was the first buy you had in Tesla?
I think so pre-split. I know they went like 1 to 3 split.
Yeah,
But
so they're like I think
back
1,200
then
was like the top around that
they were
time.
trading. Yeah, they were trading at like 450, I think, or
Okay,
around
so after the
400.
initial pullback, yeah.
Yeah, it
Okay, so that's
was.
good. You didn't get in at 400.
Yeah,
I mean, like
yeah.
400 post split after the three
No,
after
man.
the 3 to
I
1
I've had
or
one
1 to 3.
degenerate basically trade that I've made in October 21. I went super long Tesla. I was very concentrated, and it was at like like 800, and I rode it up to 1,200, which is like 400 today, and I
Yes,
sold it back
yes.
there. I was so
Nice,
happy. Like I've
nice.
made a
That's
lot of
good.
money there. But yeah, it was
Yeah,
mostly like a luck basically.
yeah.
Because I was switching brokers at the time, so yeah.
Yeah, ETF FaceTime said you're one of the most level-headed 20-year. Honestly, like
Thank
he's
you,
got a point
thank you.
there because when I was 22 years old, I was lucky to get very started in my single name security investments, in like right after the GFC. So really, it was like buy and hold during that time, and
Mhm,
if you just bought and hold anything, like I think for me, my biggest investment that I made with the biggest gain was when I invested in Amazon. It's not Amazon, in Apple. I invested in Apple like around 2010, I think. And
mhm.
I held it for like 7 or 8 years. And then I turned that over and then I invested in Tesla like before, like in like the sub 200s, like
Wow.
pre split. So I rode Tesla for a little bit and then I sold too soon, of course, because the thing just went ballistic after that. But I didn't have that humbling state that a lot of people gotten so early, and that's actually really good because honestly, the market will humble the f out of you.
Yeah,
What I mean
for
by
sure.
humble, I mean like you will lose a large amount of money in a very short period of time if you're not
Man,
careful.
I was
And
losing a lot.
yeah, yeah, dude. Honestly, it's good that it was early because I guess the amount of money that you're investing into the market now, it's going to be like so minimal if you just keep on investing in dollar cost averaging every because you dollar cost average every week or every paycheck or something, right? Yeah. So
Yeah,
like
yeah.
this is
I
going
was
to
buying
be
every
like
month.
yeah, this is going to be like loose change when you get older, assuming things go well, like 20 years later,
Mhm.
you're gonna be looking back at how much you put in the stock and just like, wow, if I put in the money I was making today, this is 20 years later, like you would just be so rich, but I mean that's just the
Yeah,
game. That's just the game. So that's good. That's good. Tell us a little bit about Duolingo. And to be honest, I hope this isn't personal or anything, but is English your primary language? And if it's not, did you actually use any type of language learning tool to learn English, or would you? Because they teach it in school out there in Europe, right?
yeah,
Yeah.
yeah,
Oh,
yeah. No, no, I didn't learn it through Duolingo or anything like that. I was basically
I
learning
do
about
learn
it
man like
from
Rosetta
the.
Stone or something.
I was learning it about it from the beginning because I was consuming obviously a lot of content on the web. I was watching movies, I was listening to the music, and you get to kind of intake the vocabulary from English. And I was talking to people, I was chatting with people in English, and I got to perfect. I'm not perfect, obviously, in English. I make mistakes, but yeah, the core of it I learned basically through all these activities.
So, I mean, that's good that you learned about the investing aspect at such an early age, and especially from family, because that's probably the best way you can learn that to instill that is like are like 401k. Well, they don't have 401ks out there in Europe, but
Oh, there's
is
nothing
like
like
dollar
that.
cost. Yeah, so like is dollar cost averaging like something like that for planning for retirement? Is that like a big thing in Europe out there
No,
as much as it? So that's good, dude. Because honestly, I could tell
very
you,
few people
yeah.
very few people invest in Europe. I feel like a lot of people were basically terrified by the bad experiences they had in the 90s and so on, and a lot of people just gave up on it, and it's still like a stigma basically. When you talk to them about investments, they're getting scared about these scams that they happened in the past. So it's still kind of like a very niche topic, I feel like, but it's getting more popular in the past few years for sure. Basically,
Definitely,
as
definitely.
the all the investing apps are getting easier and more user friendly.
Yeah, dude, for sure. I mean, the one thing that I know is that in the UK, you really can't trade in options, right? In the UK, like you can't. I mean, I
Not
think
sure
you could
about
do. Well, I mean, it's leverage trading and quick trading. Like it's not such a big thing when it comes to certain parts of Europe. And I feel like they're kind of introducing that out there. Namely, Robinhood and additional brokers are trying to
that.
introduce that to kind of stuff out there. I personally don't think that, when you have like a culture in Europe that isn't that they are, you guys are westernized out there, but
Yeah.
it doesn't have as much as much degeneracy as they do in the US. Like the amount of
There's not
degeneracy out
really,
here is crazy. Yeah.
there's not really a culture of risk taking at all. So basically, a lot of people are just investing, and if they are investing, a lot of people are just choosing like the bonds and stuff like that. It's not like they are picking stocks, maybe ETFs. That's like pretty common. That's like what you can the max risk you can take on basically at your retirement funds. But you can't really, at least here, you can't really pick like individual stocks for your retirement fund.
Cool, man. Cool, man. So, how did you first, I guess, switching gears a little bit, because you did touch a little bit on Duolingo earlier. Um,
Hmm.
what really exposed you? Because Duolingo kind of makes sense, especially with like the learning different languages, not just English, of course, but like all the different languages around the world that might have a little bit of exposure when it comes to Europe and pretty much all around the entire world. But like, what really exposed you to hymns? Because I know that's a very big position you have, and you got in
Yeah.
very early. Like you got, well, when I say early, I mean near its lows, because you started buying like in the single digits, right?
I think it was in fives or sixes.
Yeah, that's amazing, dude. That's amazing. And like what really got you into that one, and what really stood out with that company versus like Meta, which I know is a big position of yours as well.
I'll have to say I was kind of sold when I've seen the pitch from the CEO. I've seen the idea that there's a broken healthcare system in a lot of countries, and he was selling basically the idea of addressing this in a basically affordable way for a lot of people, especially in the US where the health system is pretty expensive. And yeah, I felt like a lot of people are just left out in the from the proper healthcare system, and I felt like you can basically make what they were doing right. I feel like is they have designed a great user interface that was user friendly, and that was addressing some of the largest stigmas basically that you have in the space, like mental health and skincare and stuff with the ED, right? And that's a lot of stuff that most people just don't want to be exposed to and talk to maybe with a doctor because it kind of feels embarrassing. But the company took it as advantage for them, and they have built a nice brand around them, and now they're expanding just into more categories. I felt like the runway that you can have there with a lot of categories like heart health and sexual health and a lot of more categories, you can expand into a lot of segments and just cross sell across them, you know make more money from the same users that are already on the platform, because chances are that a lot of them are suffering from various conditions that they have to treat. And yeah, and the scores of like the NPS scores and stuff like that, a lot of people just like this service, and that's where you have basically the winner. I believed in operating like leverage in that business because it's a subscription business, obviously, which is kind of unheard of when you really think about it, because like you have this. e-pharmacy, let's say, that is basically running a subscription model, right? Which most pharmacies, at least in Europe, usually don't, right? It's like a one-off purchases that are, recommended by your doctors. Right here, you're basically they are basically covering the whole stack. You have the doctor talk to you on the platform, and then they prescribe you stuff that is delivered every, like, say, 2 weeks to your home. So they are basically, getting the full circle of it under their hood. They basically have the vertical integration right there, which is helping with their margins. And right now, they even have pharmacies that are producing stuff for them, like that they already sell on the platform. So they basically control the costs of making. They have own consultants, and they also basically have the fulfillment and all this stuff to deliver to it. So they basically control the whole experience, which is what I like, because it's basically like the Amazon approach to how you do this business.
For sure, man. And I mean, we're going to talk about it a little bit later on. Mercado Libre. That's something we're both very
Yeah.
that we're both very bullish on. But no, totally makes sense. I mean, that's kind of the thing, the way that I look at it, and the reason why I like certain software stocks is mostly because of the subscription costs and the recurring revenue that they do have. But also you'll be able to forecast the future based on certain trends they do have in their own subscription plans. And I know for some software stocks, you can't really, it's very hard to predict that because a lot of software stocks are switching from a subscription based model into a pay as you go or consumption based model. But at the
Yeah.
same time, being in a company where they're across multiple verticals and kind of taking over the entire process end to end kind of reminds me of, yeah, like you said, with Amazon, where Amazon used to just be an e-commerce platform where they sell books on, and then they brought on AWS when Andy Jassy introduced it to Jeff Bezos. But on top of that, Amazon did really attack that end-to-end service that they provide, and providing that end-to-end service really does give it the high margins that it has today. Like being able to when I actually downloaded hymns, I didn't really
Hmm.
order anything from them, but when I was doing my due diligence on them, like I wanted to see how this app was. And then on top of
Yeah.
that, I mean, I have a software background, so I could kind of open up an app and see really how good it is, depending on how the UI is, how it reacts to certain scenarios. Like if I click on this, like if I just do like some UAT testing, user acceptance testing, when I'm like trying to break the product, seeing if there's any
Hmm.
errors or whatever, I try to get into the customer service. I'll see how responsive they are and so on, just trying to see if the fluidity of the entire customer process is actually really good. And to be honest, like it was really good. Like they, even though I didn't download the app initially, the fact that I
Hmm.
just used it in the mobile browser, it was very responsive. Like it never got to a point where it's like, what the hell do I do now? Like it was a very simple menu. Like it wasn't even like this. Like you weren't just brought to like, if you go to the Amazon homepage right now and if you've never used Amazon before, you'll be like, what the hell do I do here? This is so confusing. Like, this is a very
It's
clean
overwhelming.
yeah, it's a
Yeah.
very clean UI that walks you from point A to point B. And like you said, like they even have the physicians on there that will be able to interview with you and see how it's going. And the way that if you do subscribe to something, there's automatically scheduled follow up and feedback that the doctors
Yeah.
do get in touch to you and respond to you and so on. It's a really cool product. I gotta be honest, like I had like a small position in it and I got out of it stupidly, but it wasn't enough to break the bank either way. But I could see that this is a really good company. It has a lot of potential. For someone who is an investor in HIMS at its current valuation, do you think that it is a good buy for someone if they were looking to get into HIMS right now?
Yeah, I think so. I still got price targets way up there, and I feel like, with a lot of this growth that is actually accelerating right now, thanks to added category like weight loss is fueling a lot of this growth. We are actually accelerating on a year-over-year basis, and we are getting profitable more and more every quarter, which is very good. So basically, you don't even have to, like, the multiples are, I think, pretty fair for the growth you are getting with this company. But the good part is that the growth is just so high with all this profitability that you're basically not relying entirely on the margin on like the multiple expansion, right? to actually get your return, because as the company is growing so fast, the stock has to just follow just to stay on the same multiple, right? So it's kind of battling its own way out in a way. And I feel like the biggest opportunity that I've seen when I've started investing in HIMS was like the stigma around SPACs, because HIMS was a D-SPAC, right? And a lot of SPACs just crushed after 2020-21, because a lot of them just didn't have enough capital to survive. They didn't have the leadership, and they didn't really have a working business model. But what caught my eye was that like HIMS was in this basket of companies that the market really hated, because I mean they were SPACs as well. But the difference was that HIMS actually like severely outperformed their own projections when they de-SPACed. If you can look up the presentation when they were just going to de-SPAC, like, I mean, like they blew their estimates out of the park, like by a lot. And they actually are, still debt free. They have a lot of cash on the balance sheet. They are even having their share purchase like buyback program in place. Not a whole lot of money is allocated there, but they have a buyback in place. And they're printing free cash flow that is like real, not like adjusted by stock-based compensation, like real free cash flow that they are printing. And the company is only like 7 years old at this time. Like it's pretty crazy.
Yeah, one thing that I mean, they definitely got a healthy balance sheet. They got $228 million on their balance sheet, only
Yeah.
$12 million in debt. And yeah, you were talking about the growth. I mean, the 52% forward growth, that's like no joke. The only risk that happens there is that they do have to maintain that high growth in order to continue to have its premium valuation at the moment. At least that's how the market's looking at it.
And
But yeah, like you're saying, the a 1.7% net income margin. That's still really good. And let's see here,
you
actually.
better look at the free
Go ahead.
cash flow margins, because they only went profitable like 2 or 3 quarters ago. So the margins are still like distorted on the trailing 12 months basis.
Yeah, you know what? I like to use finchat.io when I do this stuff anyway.
Yeah. Yeah, so best part about this is that like last quarter they already guided for revenue growth acceleration. So and from my experience of how they always like sandbag by a lot with their guidance and then actually come in way higher, I feel like they'll be in the high 60s this quarter when they report on the 4th of November.
That's really good. That's really good, man. All right, so let's see here.
So you're basically going from low 50s to high 60s. That's a whole lot of acceleration, if you ask me.
Actually, let me do TTM. Is this a strong quarter that they have coming up seasonally or a weak quarter?
They are not really like seasonal. I don't believe that they have like seasonal adjustment quarters or something like that. They're
Yeah.
pretty like when you look at the past quarters, they are like pretty even. Like they are growing consistently. It's not like it's December quarter fueled growth and something like that. It's not like Amazon, which has a large quarter in December.
Yeah, definitely. Well, actually, yeah, December. So we wouldn't really be getting that, but they do. We did hear some good numbers as far as Prime Day goes. I mean, they're always hitting record numbers for each one.
Yeah.
But it looks like the last two quarters over here were probably a weaker quarter in terms of free cash flow margin. I still do remember the last quarter earnings, and also with everything that was surrounding the GLP-1
Mhm.
stuff, like I still remember how much I sold it down when it came to the negative presser about Eli Lilly and Novo Nordisk saying that
Stupid, man. It's still
yeah,
trading
it was
around this news.
yeah.
It's like very stupid.
It's actually very interesting because a lot of companies do have that moment where it's like, everything's going good. The market really likes the stock, the numbers looking really good, and they just have like one bad quarter, and it's just so plain obvious why they had the bad quarter, and they've
Yeah.
reiterated many times in the conference call. You could see in numbers, see in the presentation. Like, for example, Mercado Libre, I remember that thing pulled back like 30%. It was like this was a one-time charge they had for also the
I
CapEx.
was buying at that time
Yeah,
as well.
I was buying. That was when I built my position pretty heavily. And it was like they had a CapEx expense to build out logistics. Amazon went through the exact same thing. And also they had that litigation that they had to pay out. So of course they had to price that in. So that is why margins got hit. And lo and behold, it wasn't even like one of the situations where it took multiple quarters for it to play out, but the very next quarter it came back strong, and the market's like, oh, let's buy this up right now. And it was like,
Yeah.
it
I
seemed
remember
like, yeah,
when we went like 20% and we were celebrating basically. Like it was
that
pretty
was an
obvious.
awesome day. That was an awesome day,
Yeah.
especially for that big of a company. It was pretty good. But yeah, man, no, Hams is really good. I hate to be like saying this, but if Price comes back for the third time in a row, then I will probably get in. But it's like, you know what? If this thing runs away from me, like
You know what's crazy?
I'm not
Like
gonna chase
even
it.
the last quarter, they have made only like 15 million from GLP revenue out of
Yeah,
315 million,
yeah,
right? So
and
it's like
the market
it's
puts that
only
much
like a
pressure
few
down.
percent, but then
Yeah,
the whole stock can trade up like 10 or 10% or down 10% based just on some irrelevant
yeah.
GLP
Mhm.
related news that it's not really even affecting him at all. It's like only
Yeah,
a chatter
and
about
it's so many
different, truck.
opportunities. I mean, that's a whole thing that I've said it with Transmedics earlier. I had a spaces earlier in Transmedics, and I say it with like a lot of growth stocks is that sentiment really drives a lot of these growth stocks. Like because
Mhm.
let's be completely honest, like with these low, not really low flow, but with these smaller market cap companies, like let me actually bring up. Let me bring up Hims on Seeking Alpha. It's a much cleaner thing over here in Seeking. A lot of people are used to it. Otherwise, I'll be using FinChat.io. But
Mhm.
yeah, if I go back to its valuation here, I scroll the way down here, its market cap is 4.7 billion. This is it is not hard for maybe 3 or 4 hedge funds to get together and just trade this thing down like 20% if it honestly felt like it on whatever news. Like, because I'm a believer that news really follows price action. And if a stock is down like 20% for whatever reason, there will be news that comes out that says this is a reason why it's down. Right. And then
Yeah.
every single news media outlet is going to pin that on it because they want to get the clicks. They want to get the clicks. They want to get the ratings and everything. So they're going to say like, that's the reason why. And look, you gotta watch our channel all the time. You got to go to our website because we're going to tell you the truth. We're going to tell you the reason why things are down. But it doesn't
Yeah.
really, it doesn't matter the way you label for the reason why something's down. If for some reason a hedge fund with a $4.7 billion market cap decides like we're going to short this stock and then we're going to sell it down hard so that we can make a lot of money on the way down, and they're going to rebuy it back up, it will happen because they can do
And a
that.
lot of them did
Yeah.
actually.
Yeah.
We've
Yeah,
had
they
like
do.
2 or 3 short reports in the past like 9 months or so,
It's absurd.
and like
Yeah.
every time they came out, the stock tanked a lot. And then I read through the research, and I basically like it was pretty weak like every time.
I know, man. Like it happens. And that's the thing I kind of wanted to ask you. Like, is that because I know that you're not just looking into the U.S. markets. You're also looking into the European markets as well.
Yeah.
And if I recall, Poland is a company that is not a. I'm so sorry. Poland is a market that you're very bullish on right now. And
Yes.
economy set aside and everything. Obviously the stock market of any country is not defined by how good the stock market's doing, because usually markets, tradable markets, tend to front run the anticipation that an economy will
Hmm.
boom. And like if you're like, let's say in GFC, right? The market didn't
Yeah.
bottom when the economy was at its worst. It bottomed well before that. And then people didn't believe it. And it started riding up and riding up. And people were in disbelief that we are coming out of the great financial crisis. The same thing happened in 2022 as well. Is that something similar that happens in European markets? Like, you're buying in Poland now. How is the economy of Poland doing in its current state, and what makes you bullish in Poland?
Yeah, so Poland right now is like in a very interesting situation because they still are growing pretty fast. I mean, their economy is growing like between 3 or 4% per year, and they will continue to do so in the for the few coming years. So that's great. They've got some hiccups with retail sales and stuff like that. I know they came a bit weak in the recent times. They are also battling inflation pressures because they were easing off some support for energy support for people, some subsidies. So that basically translated into a bit of accelerated inflation again, but it's around 5%, I think so. The wages were rising very fast with the new government. So you've got the middle class that is basically gaining pricing power. I mean, purchasing power. That's what I wanted to say. So what makes me bullish on Poland is a great combination of you've got Ukrainian migration. So you've got Poland took in like over 1 million people that are still staying in Poland from Ukraine. A lot of these people are well educated. They are, participating in the workforce. They are creating their own companies. They are participating in the whole economy, right? So that's good. That's helping with the demographics of Poland, I feel, which is not really good. But like, look at the developed world. I mean, basically in most countries, it's all the same story. Somewhere better, somewhere worse, but all along the same lines, you know. But what makes me bullish on Poland is simply like it's a very a business friendly society. I feel like it's still very conservative, so they are maintaining, I mean, their heritage, you know, in a way, but they are rejecting a lot of the mistakes that many Western countries have made. So they are arming themselves to the teeth, which is great, by the way, because when you really look at the history, a lot of the countries that are actually on the top when it comes to technology, I mean, a lot of it is going hand in hand with high military spend, right? So as you are spending a lot on military, you're in a way creating the market for military technology, which in turn basically motivates a lot of your entrepreneurs in your country to create all these startups and stuff like that and develop technology because you've got a market to sell to, right? So right now, obviously, Poland is buying a lot of US technologies and from South Korea and stuff like that. But you've got a lot of startups from Poland. For instance, I've read just recently about one based in Krakow that has developed world's first fully autonomous drones that can help, like in situations where you have fires, for instance, on a spot. They can like autonomously be launched from tubes, and they can basically observe like where the fire is. You know, they can scan basically the zone for the firefighters, and they can basically help with the intelligence, or maybe help with rescues of people, right? The best part is that they are fully autonomous. They don't have to be, driven by skilled pilots. They can be used autonomously. And you've got stuff like that. Like the drone technology is very important, but they have a lot of other interesting startups, even in
I'm guessing
healthcare and
that's one of
stuff
the
like that.
companies you're invested in, right?
No,
You're
no, no, they
invested
are
in a Poland
private.
drone company.
I've just read
Oh,
an
okay.
article about them. It's like very recent article, but it's just one of the examples that is emerging in Poland. You've got a lot of interesting startups that are coming out of it. I feel like when I'm looking at economies, I should say, I feel like you've got like three stages. The first stage is basically that you are the manufacturing plant, right? So you're just taking orders from other countries that they set up factories in your country, and you're basically just, you have got low wages, low skilled labor force, right? That is manufacturing stuff just to be exported into the other parts of the world, right? So that's basically where China was for the most part of this century. um, and basically every Eastern European economy after the fall of communism was in this stage, right? And then you've got like stage two economies, where I feel like you can add Poland, is that they have like their own leaders that are kind of emerging from the economies, like their own leaders that are basically taking over a few segments, and they are actually growing to a point where they are starting to expand beyond the borders of that country. So, for instance, you've got the e-commerce giant Allegro in Poland that is, now buying up stores in neighboring countries, and they are expanding into other countries in Central and Eastern Europe. So they are expanding into Czechia, Slovakia, Hungary, I think Slovenia, and other countries, right? So they're now looking to basically sell the IP, the idea that they have into other countries. They're exporting it in a way, right? And then you've got like in an example of Poland, you've got like the basically state oil company, I can say. It's called Orlen in Poland, and they are basically like they are drilling oil and stuff like that. They've got
Wait,
their
what was the name of the other company you mentioned? The tech one, Allegro,
yeah, Allegro.
Allegro Microsystems.
No. I can send you the ticker. They are on Warsaw Exchange.
Okay, what's
Uh, I'll
the ticker on board?
I'll send it over to the StreamYard chat,
Okay,
and it's like I feel like it's like $9 or $10 billion company at this point. So pretty big for the standards of Poland. It's one of the biggest, and you've got a lot of more companies that are just reaching huge sizes in Poland and are now expanding into neighboring countries because they are looking to export basically their ideas. I mean,
interesting.
it's a pretty recent IPO, so the performance is abysmal, I guess you can say. But a lot of operating optimization is going on at the company right now, especially with the assets they bought outside Poland. That is only getting like costs under control and stuff like that. So yeah, it's a like a pretty long shot story still, but I feel like it's going to be a great one.
That's interesting here. Oh, that's quarterly. Okay, so they
It's
probably got
basically
earnings
an
coming
e-commerce
soon.
marketplace.
Oh, okay. Yeah, I got to check that out. And do you actually have a brokerage account open in Poland, or are you able to invest in that from Slovakia?
No, I basically have interactive brokers account, and through which I have access to Warsaw Exchange among many other exchanges. So I'm only basically like buying a stock at the exchange.
Interactive brokers?
Yeah, they are
Cool.
very great.
Yeah, interactive brokers is really good. I used to use them, but I don't know. Being in the US, it doesn't really make sense to pay for those fees and the data as well. I'm in the US, like I don't know how common it is out there, but for people who don't use
Last time you
interactive
used
brokers,
them?
is that you, huh?
When's the last time you used them?
I used to use them when I was trading futures. But even with US stocks, like you have to pay for the data. In the US, like we almost all of our services, they offer free data, so you don't need to pay for it. They subsidize that data for you, whichever brokerage you have, like
Because
Spectrum,
like
Robinhood, Trust.
interactive
Yeah.
brokers went large changes in the past like 2 years. You no longer pay for data that you used to, and the fees
Oh, really?
went very much lower from where they were back then.
That's
So
good.
because they basically switched the strategy and are now kind of focusing also on the retail traders. So it's not only like for
Yeah,
big
yeah,
institutions, but they're also like trying to be user friendly for your retail. They've introduced a couple of apps that are pretty good to navigate for retail. So yeah,
yeah. Look
that's
at
when I switched actually.
look at this interactive brokers chart. Look at this freaking thing, dude. Like
Yeah,
this thing is going crazy, dude. And I traded this stock probably about a year ago. I made a little bit of money off it, but lo and behold, if I held it, I would have done very well. I mean, it wasn't even a big
yeah,
position, but I mean, clearly, this one's really taking it down right now.
they're
This
doing great.
company's doing really well, and they've been around for a long time. But yeah, it
Yep.
wasn't until obviously they got a little bit of hype, and there. If I
I
look
think
at this chart, you know, they're
2022
doing good.
early
Yeah,
or late 2021 is when they have made the changes that were like very pro user. You
yeah,
don't really have high fees anymore, and like yeah, you have fees, which is not really common thing in the US. But then again, they don't really use payment for order flow. So I mean, you have to pay somehow.
yeah. The one chart that I wanted to look at is EPOL, which is basically the US based ETF for Poland. I haven't checked
Yeah.
exactly what's in here, but one thing I wanted to compare with, I brought up the scale for Poland GDP, and I said before that the market is going to bottom before the economic market
Mhm.
bottoms. And I mean, you can even see it over here. Like, look at the GDP; it's trending down. The market sniffs it out, starts dropping ahead of time. They're kind of going in a correlation here, and obviously the market bottomed uh probably 6 months before the actually like almost a year before the economy bottomed. And
Mhm.
even looking at the GDP for Poland, I actually had that open on a chart. Here we go. Let me
There's
share
one
this
thing
for
that I
you.
want to mention that a
Yeah.
lot of developed economies don't really have anymore, is that a lot of the growth of Poland is actually fueled not by debt, but by productivity gains.
Hmm.
They are growing productivity like really fast. You can look up at the on the trading economies like Poland productivity, I believe, and you can just zoom
um
out for like 25 years and you'll see the growth is insane. Yeah, and zoom it out like yeah,
yeah, I mean, this is I'm
and
for
like
most countries, this is what you're
now
going to see
now
if this is a massive,
just for
yeah.
the fun of it, now compare it to Germany. That's where I'm getting a lot of different vibes from the what you basically compare it to. Usually with the Western European economies, they are not the same.
Oh, interesting. Yeah, Germany's coming down.
Yeah, Germany is coming down
Yeah.
because they've got a lot of socialist policies, and maybe basically they are not looking to grow anymore. They are
Well,
just
also their bonds are going up too. So I don't know if that's necessarily good. I haven't studied the German economy too much, but I mean they were in like negative yields for like the longest time ever, and now they're positive.
Germany
So
is their business model for a long time was
yeah.
basically cheap Russian energy, which basically is no longer anymore.
Yep. Yeah.
And you
Highly
know,
impacted by that. I mean, they were like one of their country is like shutting down nuclear reactors, and that's like one thing
basically as
that
well.
I'm not really going to be like someone to criticize an economy for, but like if you have a major pipeline that's coming from Ukraine that's being controlled by Russia and all the energy coming from Russia, like why would you shut down your self sufficient energy producers? But I mean, I don't know Germany that well. I'm personally not
I'll
invested
be
in Germany. I
completely
don't know enough
honest.
to be in that. Yeah.
A lot of the European stagnation is self-inflicted. I mean, you can look at Spain, for instance. They are also looking to shut down their nuclear reactors, and they still have like one quarter of their energy from nuclear, and they are looking to shut down nuclear in 3 years. Like, tell me how you're going to replace like 20 to 25% of your electricity in 3 years by
Mhm.
something else than nuclear. Like, it's
Yeah,
pretty
I mean, we'll
impressive.
see. We'll see what happens with that stuff, dude. I mean, it obviously the conflict isn't getting worse. That's why it's like kind of surprising to see Poland, as far as the market goes, be so bullish. Clearly, the chart is just going up. With like just a few countries over, there's a conflict that's going on that just is not really getting resolved anytime soon. But I mean, who knows, man? I definitely don't know that
And
economy too well, but it's definitely something good to look at. I mean,
what's very
emerging market. Yeah,
interesting
go ahead.
about Poland is like they have such a large army. They have basically doubled the army in the past 2 years, and they're investing heavy into military and uh, tech space. You've got uh, you've got Microsoft president just coming out last year and saying that if you're looking to build tech and AI company, you're going to build in Poland.
Yeah.
Like that's a pretty big word that
Was
you
it
put.
because of the labor, or like why is Poland such a good place to invest in
Because
technology for abroad?
you've got great education at Poland, like the STEM subjects, very great results from Polish students. So you've got
Yeah,
educated workforce, right, for the companies that are looking to build AI and stuff like that, and you've got like kind of a business friendly space. I'm not going to say that it's like the most business friendly, but it's pretty good for the European standards, I feel like.
that's good.
So
Yeah, I mean, I'm expecting the U.S. dollar to come down and depreciate quite a substantial amount in the next few years. And to be honest, when it comes to these emerging markets that we will talk about, If the US dollar comes down, that's only going to empower these foreign currencies, and that's going to be very beneficial for these countries, especially when we talk about the conversion rate.
I,
Um,
and
yeah.
there's like one more thing that is, I think, very impressive. If you pull up the chart of Polish GDP over the past like 20 years, and then you compare it to the ratio of government debt to GDP, it's not fueled by taking on more debt at all. Like they are maintaining the balance basically. That's like the most mind-blowing chart I've found like in the past few years. Like just zoom it out to like 25 years, and you'll see that the ratio
Well, it
is
looks nothing
basically
like our chart.
wild.
It looks nothing like our chart. I'll tell you that right now, man. Like the fact that this isn't going straight up and to the right, it is
And their debt,
definitely
their
not like
debt
our
is like
chart.
55% of
Yeah,
GDP.
yeah, that's crazy.
Like
I mean,
it's
it's
so
been under
low, man.
control.
Like
Yeah,
most of the Western European economies or even the US can like is jealous basically of this ratio.
yeah. It's pretty bad in the U.S. I mean, it's just not. It's not getting better. What do people in Europe think about the election we're having right now? Like, what are the thoughts of it? Like, do they have strong opinions about it? Do they think that we're a freaking joke? Like, what do they think about it out there?
Media is basically so tilted towards Harris, like it's insane. Basically, if you're,
Out there,
uh,
really?
yeah, it's extremely pro Harris, like across Europe, because most of the media outlets in Europe are very left leaning, and
Ah, okay.
basically, if you're voting for Trump or a fan of Trump, you're basically a nut job in the hands of mainstream. That's like the
Yeah, I mean,
perception.
well, they're not going to exactly make the whole tariff situation any better as far as taxing goods, and like the U.S. is really trying to portray that dominance. So they
Yeah.
want to keep the dominance. So the last thing a right wing Republican president wants to do is to be able to balance out power and tax people less, tax neighboring countries best. But
European politicians are very scared of Trump because, like, he's looking to really push the countries into spending more on military. Because
yeah,
basically, the European model in the past few years has become like outsourcing the military spend to the US military complex, and we are just spending on social programs and stupid stuff, right? But that has to change. Like, we can't really rely on a partner like US for our military spend. Like, we have to spend it ourselves, right? That's how you make friends. You do business with them. You don't have to like rely on
I
them paying
mean,
for it.
it's not the motto. I'm not a
I
political
don't like
guy.
it.
All right, like I don't
You
really
know.
care. I don't really care. Like as if the market goes up, I'll be happy. But it does not seem like that's the motto of Trump, where it's like, let's all be friends and I'll tax you less, whatever. Like I'm sure there's a positive. Um, I'm sure there's a plan that will benefit everyone in the long run. But at the same
Hmm.
time, like there is a lot of deglobalization going on in this world, and it's
Yeah.
very apparent when it comes to our country. We are looking at other countries as a way to fund our debt, rather than increasing taxes. Probably not the best move, in my opinion, long term, because you're just going to make enemies long term. Near term, you'll probably benefit a little bit from that, but long term, you're just going to make some enemies. But we'll see what happens, man. We don't even know if he's going to become president or not. That's just what the betting markets say. But
Yeah.
in my opinion, but from what I've seen on domestic on local polls, is that it seems like it's a kind of a gridlock. Maybe Trump's lead by a few percentage points, but that's what the betting markets say. But to
It's
be
going to be
completely honest,
interesting.
I don't. Yeah. I don't trust the betting markets, to be honest.
I'm just
In fact,
enjoying
yeah,
it. I've
yeah.
bet a little bit on it just for the
Oh, you
fun.
bet. So who'd you bet on,
Yeah.
Kamala or Trump?
I've bet on Trump, but I've
Oh,
bet
really?
when
You bet on,
when
even
the
though
odds
even
were,
though it doesn't pay that much.
yeah, the odds were pretty high back then when I bet.
Oh, you did a while ago. Smart man, smart
Yeah,
man. Yeah, there was
I
that
bet
there was that time
uh,
when Kamala was going to
it
win.
was like
Apparently, at the betting markets,
a month ago or 1.5 month ago. So
it was like
so yeah.
yesterday. That's
So
what it
so
felt like. Yeah,
the markets were favoring Harris by a lot back then because that's basically where she joined the race. So she pulled ahead, and I felt like, let's not get too bit ahead of ourselves. So I've bet on
yeah,
Trump.
yeah.
Let's see.
Well, I took the other side, but that was only very recently. I took the other side because just like you know,
I wouldn't
you got to
bet
look at
right
the risk
now.
reward.
They are pretty
Yeah.
skewed for Trump right now, but back then where I bet, it was like pretty good odds for Trump.
Well, we'll see. We'll see. If it bounces out, then that means I'll be winning. Too bad I can't cash out ahead of time. I didn't even realize I can't cash out ahead of time until after I put on the bet, and I was just like, "Oh crap!" Because I just assumed,
I can,
yeah,
but like I'm not
yeah.
taking that money out. Like let's just see it play.
Well, I
It's
mean,
gonna be
you're
fun.
betting on Trump. Like for me, it was more of like an arbitrage, right? Because I know that as we get closer, it's gonna be
Mhm.
it's not gonna stay like sided on one end. Like it's gonna be like basically the Fed, where it becomes well, that would happen last time where it became like a 50-50 out of nowhere. But
Yeah,
for this one, like I think it'll become closer to a 50-50 as we get closer to it. And I do think that markets might price out that extreme bullishness on Trump becoming president. But we'll see, man. I could totally be wrong. If I lose it, I mean, it is what it is. Like it was a gamble bet. I kept it small. We'll see. We'll see. So last thing. All right. What was the worst mistake you've ever made in investing that to this day you still remember it?
yeah, man. There's a lot of them. I
Or
mean,
one
if
specific
you're
one.
man, I've sold Nvidia too early. I feel like that's
What
like
did
my
you
largest mistake. I was buying. If you remember the last cycle, we've had a lot of, we have oversupply of GPUs. Nobody wanted Nvidia back then, and and they were just launching Omniverse, and I was looking at it like this is very interesting ecosystem that's basically keeping you locked into Nvidia GPUs, because obviously when you standardize on the Omniverse, you can't really switch to other company because you can only use it with Nvidia products, right? So it was a very clever step, and I was very bullish on it. I was buying like pre-split, which was 1 to 10. I feel like I was buying it like 120, 130, and in the low 100s, and I sold it for like when it was around 200 or so. Now we are basically at
damn.
1,300
Yeah, I
basically
know.
if you adjust for split. So
I hate that,
I've
dude.
missed out on a lot of games, man.
Yeah, I know. Like, there's gonna be so many of those, like so many, where it's like you think you're kind of being smart a little bit, and then if you just held for like well, in this case, one
And
year.
I remember
Yeah,
nobody wanted it back there.
yeah.
That's what I like to
Actually,
buy. I don't like the high expectations, man. Playing.
sorry, man, we're not gonna go over transmedics in this pod. There's probably lots of content out there that's gonna be discussing transmedics. We just don't have the time to go over it. But I mean, hopefully the next one. So with that being said, thank you for spending the time to come onto the pod. I know it's very early for you,
My
but I
pleasure.
appreciate you waking early. Sorry, Kris couldn't make it. He had a critical outage at work he had to attend to. The timing of those is just impeccable. Like I'm sure there's like someone at his job which is just like, oh, he's got a pod coming up. My computer's broken. Let me escalate this level of support. Everything's broken. Everything's broken. Everything's broken. So well, we'll,
It's
we'll, we'll,
fine.
we'll see what happens. It's all good. I know you guys talk a little bit in the background, but yeah, man, it was great bringing
Yeah.
on you on here. I don't think anyone, at least as far as I've seen, like, have you ever done an interview with anyone on a podcast or anything yet?
Yeah, I think so. I was in a
Oh
couple of
yeah,
episodes. Yeah, back
maybe I
there.
haven't I haven't checked
It
any.
was
I
like
haven't,
1 year
yeah,
ago or so. It was
yeah,
pretty much, back
that's good.
then.
That's good, man. That's good. Well, obviously a much different market
A
back
lot of
then.
my plays weren't still
Yeah,
playing out all that much, so now I have the
yeah,
credibility, let's say.
yeah. There you go. Yeah, honestly, you're still 22 years old, so. And you're not even 20 years old. So I mean, like, you got so much
Only
time. Yeah. Huh?
only tomorrow, 22.
Yeah, there you go. Wait, so tomorrow. Oh, my bad. I must have missed that part.
Yeah,
Happy early birthday. Happy early birthday.
thank you, thank you.
But yeah, thanks for coming on again. Appreciate it. And thanks everyone else for watching. Hey, if you haven't, make sure you like and subscribe to the video. Also hit the notification bell for any future content that we release. And it was good. It was good having you on, Sam. Appreciate it, man.
Thank you, man.
All right, later.